And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani, and I am very happy to be back at the New York Stock Exchange, where I have been for 24 years. It's a big day for all of us at CNBC to be back here. Two of the best in the business with us, as we always have the best in the business on ETF Edge. Our guest today, importantly, John Hoffman, head of ETFs and Index Strategy Americas at Invesco, and Doug Yones, the head of ETFs at the New York Stock Exchange, right here on my left, your camera right. Doug, I want to start with you. If 2020 was the big year for bond ETF inflows, 2021 seems the big year for equity, particularly plain vanilla S&P 500 type inflows into equities, really large this year. What's driving these inflow, and what other trends are you seeing? Give us a 30,000-foot view.
Yeah, it's been really interesting. The growth rate of ETFs just hasn't slowed down all through the pandemic. And as you mentioned, last year really focused on fixed income. This year, $331 billion coming into ETFs. Majority, almost 80%, equity ETFs. There's a few themes that are still running out there. First and foremost is adoption rates. BBH, Brown Brothers Harriman, they put out an interesting report showing investor adoption of ETFs across almost every segment. And what's really fascinating to me, it's not just you and me as retail buying ETFs now. Advisors are more and more showing ETFs to their clients and putting them in portfolios. Institutions more and more adopting ETFs, and it's because the wrapper offers efficiency, tends to be a little lower cost, tends to be a much higher tax efficiency. Second key thing that I'm seeing, Bob, is active. Active ETFs continue to grow. Over 100 different active issuers now on the market, over 500 active ETFs now, 70 some launched already year to date. As if you're an active manager, historically you might not have been interested in ETFs. You'd have to show your holdings every day. That's now changed. We've got models that can fix that. So a lot of active adoption. And third is this sort of holy grail of ETFs, conversion direct from mutual funds to ETFs. Guinness Atkinson did it first in March. Today, second ever time it's happened ever. Adaptive worked with Nottingham as a platform, and they converted a mutual fund, 150 million converted today to the New York Stock Exchange in an ETF, AGOX. So there's a lot of these really interesting moving parts, all of which are bringing together a lot of cash flow into the industry.
I want to talk more about sort of the plumbing and the ETF trends, but John, I want to turn to you and get your thoughts on sort of sector and individual ETF moves, because you're one of the biggest providers out there. What I saw, John, was the slowdown in green energy in 2021, and I wonder if you can just sort of talk to us about that a little bit and what you are starting to see here. You run two of the biggest clean energy ETFs that are out there, the Solar Energy ETF, TAN, and the broader fund, the Green Energy Index, PBW. Both of them are 40% off of their highs that, interestingly, they hit in February as interest rates hit new highs. Can you just tell us, this was such a hot trend last year, and CNBC viewers love investing in thematic tech and clean energy. 40% off their highs is quite notable. What's stalling clean energy out right now?
Yeah, Bob, I think let's widen out the lens a little bit here, and let's go back to last year. During the election, leading up to the election, flows started to really pick up in the space. In 2020, both of those funds were up over 200%. And when you think about the transformation to clean energy, we think about it over decades, not days. And so, again, Bob, I joke that after 15 years, this is an overnight success story in the space in sustainable and clean energy. You go back to the early days when we launched these funds, it was a new sector, a new space, a lot of new companies. It's still a relatively new space, so you're going to see some of that volatility that you're pointing out. But when you, again, widen out the lens and look at the big picture here, the move to sustainability, the move to clean energy, again, it's not just a U.S. thing. It's a global phenomenon. Yeah. And the money that's moving into this space is going to be significant. And so, again, a little bit of a pullback here. But when you widen it out and look at the trends, and again, it's still a small market. We were looking at the market cap of all of the names in PBW, the Clean Energy Fund. Again, exclude Tesla. Add up the market cap of all of those names, and you get to a company about the size of Johnson & Johnson. And so we think there's still a fair amount of headroom in the space, especially as this transformation to clean energy plays out, again, driven by regulation.
I can't help, John, but think that a lot of this reason it topped out was at the same time that interest rates topped out in mid-February. A lot of these companies don't necessarily make a lot of money, and I think that certainly was an aspect in it. But it hasn't prevented people from launching new ETFs, particularly green ETFs. You've got a green building ETF, symbol GBLD, you launched just a month ago. What's in that, very briefly?
Yeah, so again, we pioneered this space of thematics. We continue to provide more precise ways to get exposure to the space. And so this is about, look, this conversation on decarbonization, you can't have it without looking at the real estate sector. 38% of the carbon emissions come from buildings. And so this is really about providing investors a precise way to invest in the real estate sector as it relates to cleaner and greener buildings. And so this is the full ecosystem of green buildings, every stage, construction, redevelopment, retrofitting. Bob, it's a continuation of the same theme here.
You can't help but think, Doug, that this was the hottest thing in 2020. It's cooled off a little bit. I think he's right about the long term, but it's tough when you're 40% off of the highs.
It is, but at the same time, I mean, John's breaking new ground, whether it's the green building ETF or other ESG-related ETFs. I mean, there's now almost 100 ETFs here in the U.S. Europe's really dominated the ETF space in ESG investing, but we're catching up, and we've got $11 billion in investments coming into these thematic, if you will, ETFs here in the U.S., and it is a combination of conversation. I think, John, you're absolutely right. Some of the advisor conversation now is, should this be part of my core and not just thematic? And I think we're starting to see that again. Some of the response rates and surveys, some of the conversations we're having at the exchange, our investors are starting to take a little bit of a tilt. BlackRock joined the fray, if you will, earlier this year. They launched 2 ESG ETFs and actually broke the record on first day assets under management. So more and more investors are really turning on to the idea of, hey, maybe this is my core portfolio and not just a thematic or a satellite.